Hi everyone, Ravi Singh from Remax Hallmark Realty. I hope you're doing great. It is actually Monday, June 16th. It's not the typical Thursday I do state of the market. And the reason for that is quite honestly because we had some technical issues for the last state of the market. So, that being said, I want to jump right into it and give you guys some information that I think will be of value to you, as well as some insights and some knowledge from Frontline. Myself and my team, we sell a lot of homes in the GTA and in the general Greater Toronto area. And I'll tell you, the market has been very different this year. Now, what I'd like to do is I'd like to share with you a couple statistics, which I'd like to start with, and then I'd like to get into some more facts that I think will be important. And then I'd like to tell you just a couple stories about what we're seeing in the market, and then give you some advice in terms of where I think the market is going. So, guys, the first thing that I want to share with you is that from 2024 to 2025, looking at the exact same time, which is May of last year and May of this year, new listings are up 14%. The average price is down 4%, and the amount of sales that are actually happening is down 13%. That's a pretty interesting variance from last year to this year. All right, we have a lot more inventory. We have homes staying on the market longer, and we have average price falling just 4%, but falling 4%. So, what does this mean? Well, when we calculate days on market and a price and all these statistics, what I usually do for my sellers and for my buyers is I take all that data and look at really and truly one major metric, which is months of inventory. That's where I like to start. And for most neighborhoods and property types throughout Greater Toronto, we are in a balanced buyer's market. What I mean by that is we're dealing with 3, 4, or 5 months of inventory. For most real estate agents in the Greater Toronto area, that's a strange place to be because, at least for the last 10 years, other than small blips on the radar, the market has generally speaking not been in a buyer market territory. What this means is if you're a seller, you need to look at the market from a slightly different perspective. The first thing we're going to share with you is in buyer market territory, prices next month or the month after should statistically be a little bit lower than they are right now. So we often talk to our sellers about pricing ahead of the curve. The second thing is in a buyer market, the listings to sales ratio, or the number of people who are actually going to achieve a sale, is less. For example, in the downtown condo market, the listings to sales ratio for a particular type of condo in a particular area over the month of April, I was doing this for clients, was pretty much 1 out of 10, meaning 9 homes out of 10 are not selling. So the way you price a home, the way you prepare a home for sale, the way you market a home, and ultimately the things that your agent does to ensure that the house sells is of utmost importance. Once upon a time, people would say, well, real estate agents, they don't do anything, the house just sells itself. And in that situation, the conversation was, as real estate agents selling homes, well, what are we doing to yield the highest price? Now, the houses are certainly not selling 9 out of 10 times sometimes. So the question is, okay, in that scenario, what are we doing to actually achieve a sale? And those are two completely different questions. Based on this market right now, when you're interviewing an agent to sell your home, you want to take a look and make sure that they're going to equip you with the right knowledge and make sure that they're going to equip you to achieve a sale when 9 out of 10 homes are not selling in certain areas. Now, let me be clear, guys, that was for the condo market. And when we talk about different areas and different types of markets, the actual listings to sales ratio changes. Now, when we take a look at these average numbers of sales being down 14%, listings being up 13.3%, price being down 4%, that is an aggregate. That is for all TREB. And what I would suggest is if you are looking at a particular home in a particular area, you invite a local expert, someone who can disseminate the data and give you insights specific to your area. So let's get into that. Let's talk about a couple areas and a couple particular situations that we were in. I recently sold a luxury home on a 25 to 30 foot lot, single car detached, custom new build in East York. And other clients of mine who are in East York, they said, Rab, tell me what goes on with Roblin because I'd love to potentially list my home. And we're kind of keeping an eye on that and we're rooting for you. Well, let me tell you that we hit the market with everything just right. and it took about 26 days to get an offer. Now, unfortunately, we did have an offer, but that offer fell through conditionally. During the time of the conditions, the buyers failed to meet their conditions and the property was then relisted on the market. We then had to pedal a little harder to achieve a sale. And during that time, we actually lost 5% of the market price. All right, because the market was sliding and because that was at the higher price point for the area. Luxury homes, custom homes, newer builds, especially in the sort of urban and suburban markets, they are going to be less liquid. But let me take another example. We listed a bread and butter, main floor family room, detached two-car garage, upgraded home in a suburban 905 community of the GTA. And when we listed that, we spent a lot of time reviewing all the different data points and we decided to price just 10,000 below everything else that was listed. And in fact, we sold for full asking price in one day. And again, pricing was in our favor that time. Let's take a look at another example. We had a townhouse listed, 3-story, 3-bedroom, 3-bath, newer build, turnkey in Durham region. This particular townhome was listed again right at market value, less $5,000, and we ended up getting multiple offers and selling over asking price. So again, in all these stories, pricing was the most important tool. Unfortunately, for sellers who are selling condos, they're not seeing that type of liquidity. What I mean by that is we are dealing with a market where we have had supply increase due to many reasons over the last 2 years. The first reason is that builders have delivered twice as many new condos as any year prior, basically. The second reason is a lot of landlords have decided to exit the condo landlord business. So we have had landlords say, when I look at the cash flow and when I look at the landlord tenant risk and when I look at the interest rate environment, we're going to leave that business of being condo landlords. In fact, many of my clients have done that as well. And then finally, when we take a look at the interest rate environment, the political environment, and the trade environment, the confidence in the Canadian economy has subsided a little bit, and people are less bullish on the condo community as a real estate asset to hold. What I do find is people still want to live in walkable commerce centers and density areas of the city. And that market is sustaining. But with all of this added supply, buyers have their choice. In this particular scenario, we listed a condo. My clients are great. We listed what we thought was kind of just right discounted, about 10, 15,000 below market value. And then we further discounted another 30,000 to then finally get an offer conditional at a significant concession on price. And they're okay with that. And we went through this and we mapped this out from the very beginning. The condo market over the next 3 months is expected to further fall. And guys, there's nothing wrong with that. That is just a market opportunity for buyers. And I'll just share with you, Justin, Ashley, Nelly, Sang, myself, Jay and Jerry, we are getting deals for our buyers. All right. And if you are a buyer and you have questions about buying a condo or a freehold property, we are taking on new clients right now and simply send me a DM. We are seeing an unprecedented opportunity. For example, I just spoke to my colleague Elizabeth. She said that she has a condo, check this out, 624, no, 524 square feet, unobstructed views at Queen and Dufferin, and it's listed for 489. Excuse me. She's got no showings. And this is in a great building at 8 Gladstone, and it's listed at 489. Like, that price we haven't seen in a long time. We have another client who was looking in the Yonge and Queensquay area, and they ended up getting a great unit and an older building, 1,000 square feet, but they got it well under $750 a square foot. Now, I know builders don't want to hear that, but that is the reality of what buyers are striking deals on in the resale condo community. And make no mistake, the market eats from the bottom up. So whether it's freehold properties in the 905 or the 416, or whether it's condo properties, the lower the price point, the more interest there will be on the property. Um, Guys, this buyer opportunity has prompted even members of my family to say, Rav, maybe we should sell our semi-detached and buy a detached because quite honestly, this window, it's not often seen. Guys, I'll just share with you. I have a two bedroom, two bath, split floor plan corner unit with unobstructed views, parking, and locker at the luxurious Bisha Hotel and Residences. And we've priced that at 1.136. At its highest, that was worth about 1.3. So there's a $270,000 discount on that property. Guys, these type of opportunities, Warren Buffett very often was quoted saying, "Be fearful when everyone is greedy, and be greedy when everyone is fearful." I understand that we are dealing with uncertain times, with potential conflicts in the Middle East, with a trade war between the US and Canada, with the interest rate environment and the forming of government all changing day by day. But what we do know is immigration continues to come to our shores. We do know that interest rates are significantly lower than the 20 or 25 or 30-year average or the 40-year average of TREB. And we do know that housing delivery is still at a shortage compared to the growth of our population. That to me sounds like a sustainable opportunity to yield benefit by having equity in strong real estate assets. Whether it's your home, the place where you raise your family, or whether it's a place where you invest and have a tenant, real estate is by far and wide one of the best places to build wealth generationally for you and your family. Guys, I hope this video finds you well. I hope if you have any questions, you can reach out to us via social media or via our website, connexusgroup.ca. Um, we are, certainly one of the top producing teams throughout the GTA with the largest brokerage in the world. And we value a deep level of knowledge when it comes to real estate in Toronto and its surrounding areas. As always, you can reach out to me at Ravi Singh 5 on Facebook, at Ravi Singh Remax on YouTube, at Ravi Singh Remax on Instagram, and enjoy your summer, guys. Normally, this is a slower time for the real estate market, especially August, but I think this summer will actually be pretty busy work wise. Thanks very much for tuning in. Have a great day.